Welcome to today's Business Report. I'm Denise Williams, bringing you the developments shaping markets, capital access, and business decision making across Jamaica and the region. So let's get into the stories that matter. Horace Bryson, Technical Director at the Airport Authority of Jamaica, shared updates on the Negril Airport development with the audience at the Thropex Investment Conference happening this week at Travelers Beach Hotel in Negril. Over 200 acres have been identified in Little London, Westmoreland, as the site of the airport development. The first phase of development is expected to cost US $287 million and will be financed from monies collected from Norman Manley and Sangster's International Airport fee cess charged on passengers. While the October 2025 hurricane pushed back groundbreaking, Bryson identified the work to be started in this financial year. The project will be a Code C faculty with a 2,240-meter runway, allowing it to handle a Boeing 737 size aircraft from the US and Canada. It is projected to cater up to the 1 million passengers over the first 10 years. The airport is designed to drastically reduce the current 3 to 4 hour travel time visitors endure when driving from Sangster International Airport in Montego Bay to Negril. The government of Jamaica is set to raise billions of dollars on the local market this week through 2 benchmark investment note offerings as it moves to help finance its $1.44 trillion national budget. On Wednesday, May 27, the government will seek to raise $3 billion from a 7.5% benchmark investment note. The minimum purchase amount is $1,000 and interest payments will begin on August 28, with the payments made every 6 months thereafter until the note matures on February 28, 2035. In a separate offer, the government is also aiming to raise a further $3 billion through an 11.25% per annum benchmark investment note, which will mature on February 12, 2046. The minimum investment is also $1,000. For this instrument, the first interest payment, less 25% withholding tax, will be made on August 11, with semi-annual payments continuing until maturity or full repayment in 2046. For the trading period of May 26, 2026, the most actively traded securities were Kintyre Holdings Jamaica Limited with 52,477,729 units, representing 42.52% of market sales activities. JMMB Group Limited 7.35% cumulative redeemable preference share with 33,335,135 units, representing 27.01% of market sales activities. One-on-One Educational Services Limited with 12,408,938 units, representing 10.05% of market sales activities. Investor activity remained concentrated in finance, education, and distribution plays, signaling continued interest in dividend-producing and strategic assets. Turning to the foreign exchange market based on Bank of Jamaica data for May 26, 2026. Forex traders recorded significant activity with strong demand across major currencies. For the US dollar, trading margins reflected steady liquidity, with the US selling at $155.86 and buying at $157.90. For the Canadian dollar, moderate gains supported by 60-cent transaction spreads meant the Canadian dollar sold for $114.53 and was bought for $113.93. For the British pound, continued volatility offered short-term trading opportunities of $2.08 in profits for the banks. The British pound sold for $212.30 and was bought for $210.22. These movements underscore the importance of cash flow timing and currency awareness for businesses managing import costs, debt servicing, or overseas exposure. For our credit report tip of the day, dual citizens have a planning advantage that most people overlook: currency and income flexibility. If you earn in one country and hold obligations in another, your credit profile becomes part of a broader financial strategy. In practice, this means aligning your income flow, banking relationships, and credit usage so that neither system works against the other during exchange rate shifts or income changes. The biggest mistake is overextending across both systems at the same time. Two credit profiles do not mean double borrowing power on day one. It means double responsibility. Mismanaging one can indirectly affect your ability to build trust with lenders in the other, especially when global banks or cross-border financial institutions are involved. A strong dual country credit profile is built slowly, intentionally, and with structure. Think of it less as accessing money and more as building credibility in two financial ecosystems at the same time. The individuals who get this right don't just move between countries, they move with financial leverage. For our funded and focused feature, many investors spend years waiting for the right time. Strategic partnerships can shorten that timeline and help investors start building assets sooner. Of course, collaboration requires structure. Clear agreements, transparency, and proper due diligence matter. The right partners and the right framework are just as important as the investment itself. Building wealth is not only about what you can acquire on your own. Sometimes the smartest move is recognizing that shared vision and shared resources can create larger opportunities. The question is no longer whether partnerships work. The question is whether we are willing to explore smarter ways to fund growth and build assets together. Have you ever considered pooling investments as part of your wealth building strategy? And that's today's business report. I'm Denise Williams, bringing clarity to capital, markets, and strategy. Until next time, stay informed, stay intentional, and keep building forward. See you soon.